Are you trying to figure out what's going on in today's housing market? Are rates going up? Are they going down? Are house prices going to crash? Well, I'm here to help you make sense of it all. Hey everyone, I'm Jade Lee-Duffy, and welcome back to another episode of End of the Month Monthly Market Update, where I help you become a more educated home seller or buyer so you can make the most informed decision on whatever you are planning. So let's take a look first at what's been making the headline and then break it down to what it means. From MoneyWise, the headline reads, "There's a real issue as to whether we've broken the housing market." Mohammed Al-Elron, who is the chief economic advisor at Alliance, says the Fed may have crushed both demand and supply amid high mortgage rates. The article continues with, "The Fed's monetary tightening policy pushed mortgage rates in late August to the highest level since 2001, and they could keep going higher." And then it continues on, "When you go from record low mortgage rates to levels we haven't seen in almost 20 years, you destroy both the demand and the supply." And that pretty much sums up what's happening right now. Buyers can't buy due to unaffordability and high mortgage rates. And sellers won't sell because they have such a low mortgage interest rate that they don't want to give that up. So just to bring you up to speed, if you haven't been following the mortgage news lately, the average rate on the 30-year fixed mortgage this week is clocking in at 7.42%. That's the highest it's been since December 2000. That's almost 23 years ago, according to a survey done by Bankrate. And to give you a little background on mortgage rates, which is loosely tied to the federal funds rate, the Federal Reserve has been on a little bit of a rate raising spree for the last year, but they decided to take a breather in June after hiking interest rates a whopping 10 times in 10 meetings from 2022 to 2023. Now fast forward to last week on September 20th, and the Fed had some news to share. They're hitting the pause button. Again, with no changes in interest rates for now, which isn't as good as reduction, but at least it's better than another rate hike. So while inflation has cooled from its peak of 9.1% last June, inflation is currently sitting at 3.7%, not far off from the Fed's target of 2%. Some housing experts are even thinking we might be nearing the end of this round of tightening and that we've reached the peak for the cycle, and then we can expect mortgage rates to start trending down. But for rates to go down, it will depend on a few factors: rate of inflation, employment, and the economy. And if these factors, such that if inflation remains elevated and the employment is still growing, then mortgage rates will continue to stay high. Right now, all the housing experts are keeping an eye out for the October 6th jobs report and the October 13th inflation rating. So we'll just have to wait and see what those numbers are. Previously, according to many of the nation's real estate top economists, mortgage rates were expected to fall in the fourth quarter of 2023, but they've stayed higher for longer than expected, partly in response to the resilience of the U.S. economy, and for the most part, the 30-year fixed mortgage rate is expected to stay above 6% through the rest of 2023. And how are these interest rates going to affect home prices? Well, if interest rates keep climbing, say to 8% or even 8.5%, that could put the squeeze on home prices. But that's where it gets interesting. If those rates decide to take a step back, which is what many experts are predicting, well, that could lead to more buyers jumping off the fence and getting into the game. And more buyers equals more competition. And that's like adding fuel to the fire, especially when there's not a ton of houses on the market. And then that's when you start to see more appreciation and home prices rising even further. Last week from Business Insider, they wrote home prices could jump 5% in the next 12 months as high mortgage rates freeze the housing market, Zillow economists say. The article goes on, Zillow revised its 12-month outlook for home prices from its July prediction of a 6.5% increase in home prices and instead reduced it to a 4.9% increase in home prices by next year of July 2024. So according to Zillow, home price appreciation is going to hit around 5%, but other experts are expecting it to land around 3 to 5% appreciation. Getting a little bit closer to home, we take a look at the local data for San Diego. And here, looking at the median sales price in San Diego, here is the blue line, which is this year. The black line is last year, 2022, and the orange is 2021. So you can see what a difference in home prices have changed over the last couple of years. So here, starting at the blue line, this was last May 2022, and it has slowly risen up, hitting its peak at the end of August this year, last month. And so the median sales home price in San Diego was $906,000. And as of September, beginning of September 3rd, right now it's down at $892,000. And if you want to see, just scrolling down a little bit, you can see the year over year price appreciation and what a percentage change that has been. So starting from last year in May, it has been a little bit of a roller coaster ride. And then since starting June of this year, home prices have gone up, hitting 12% increase year over year in August, and then now dipping down 11.25% at the beginning of September. But here's the catch. A lot of that depends on a few key things. What happens with the housing inventory and whether sellers are willing to let go of their low mortgage rates. And with 4 out of 5 home sellers having less than 5% mortgage rate and even a quarter having less than 3%, you can understand why sellers are reluctant to sell. So for both home buyers and sellers, high interest rates are a hurdle to get over. And if you're in the market to buy, you're looking at higher monthly payments, which can be a tough pill to swallow. And for sellers, well, they're facing challenge as well. There's going to be less demand, and they might have to accept low offers for their house. It's a bit of a double-edged sword. So the bottom line is, right now it's hard to predict the future in the housing market, and we'll just have to see what the Fed is going to do next. Hey, if you found any value in this video, hit the like button. Please subscribe so you know when the next video comes out, and thank you for watching.